The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And as always, we come to you at this time. I know why it doesn't. It doesn't like, for some reason, doesn't like being shut down and restarted.
The following takes place between 2 p.m. and 3 p.m.
There we go. So we're up 51, let's call it 52 points on the S&P cash, up 362 on the Dow. Let's do this, because I forgot to do that too. Got a lot of stuff going on here, so you got to watch everything. But just wanted to make sure it was all, well, I don't want that. I clicked something wrong? Yeah, I did. Anyway, up 48 on the 48.49 on the S&P cash, 348 on the Dow, 178 on the NASDAQ. And of course, the first thing we want to check out and see what kind of push behind it. About 6.5 billion shares in the CBOE global markets volume. That's everything wherever it traded. And I like it better than a lot of stuff. The floor traded stuff from the New York Stock Exchange. It's kind of easy to move stuff around in and out of ARCA. This tells you pretty much everything's going on. If you're a new listener and want to look at what I look at, send me an email at path@tfnn.com, and I'll send you a link to the CBOE volumes for the day. But they've got them really broken down. One of the other things I really like is that they've got the notional value or the dollar value. So you can actually see that. You can kind of infer with higher volumes and lower dollar amounts that the small caps and teeny stocks are getting a little bit more action. But it's interesting nonetheless. But so is the volume going to be big today? The answer is no. But again, when you look at earnings, most have reacted fairly well. Most people are, everybody, you know what? It kind of reminds me of the old story where a recession is when somebody else loses their job. A depression is when you lose yours. I think people are afraid to say that they're optimistic about what could happen in the future. The stock market is telling you, at least right now, that it's fairly optimistic. I've got some emails already, so I'll go ahead and answer this question. Dave, 2 weeks ago, you said that if you were going to wait to be short, you'd wait until at least about the 5th or 7th of May. And, well, good call. But can you walk us back through why you said that? One, everybody was short. Markets almost never, nothing works 100% in the markets, but markets almost never go down when everybody's bearish. They go down like they did at the end of February when some people weren't. The only thing I did wrong was not go short. I tried to go short a couple of times and it kept on kicking and kicking. I just would rather buy the low, and I did. So we made a lot of money off those lows. We've for the daily trading vehicle, the path of least resistance, I am long, but I'm not long the S&P or long the NASDAQ. I'm actually in a specific sector because I thought it would far outperform the actual indexes and be a safer trade. The vehicle had already proven itself, and I'll talk more about that. But I guess back to the point, you want to see a few things in the market, and I was not seeing those. in previous down slides. And that's why I was fairly, I wouldn't say sanguine, maybe that's the right word, of markets having real problems here. Could everybody get bearish and sell, push the market down for a few minutes? Yeah, it was kind of like Jaws, though. They put 3 barrels into the shark. Eventually, the shark's going to pop back up no matter what if it's not that way. But for me, it's all about the summation index if you want to know the medium term of the market. I've got that up on the screen now. Hopefully everything's working well. And, since we've come off the lows, the summation index, no matter how you calculate it, I have my own version of it. My version actually is kind of self-centering over time, not self-centered, but self-centering over time. And what I didn't see was a huge downside in the breadth of the market over the last few weeks. Until I actually start seeing that, I'm not a big fan of going short. Now, that being said, we get back up here and volume all turns to dust. Hey, maybe you got a better shot at it. But at the same time, my guess is that we will start seeing weakness in breadth across all of them, but I have not seen that yet. I didn't see it last week. I didn't understand going short the market other than if it was for a day or two. I didn't think we were having a new trend. You can make a lot of money going short if you know what the trend is for the next 6 hours. I'm generally much better on a week or 2 weeks out. And, come Friday, I was buying. That was because I didn't see anything out here that corroborated the story of lower prices. Now, there are so many people short in this market, and I'm going to probably say that there are more people shorting it today. There are probably going to be more people shorting over the next couple of days. My thoughts were back then, and now, that we'll still probably see 3,000 on the S&P cash before the shorts give up shorting. When they do that, I will tell you. I will come on the microphone, Mr. Microphone here, and tell you that they've quit shorting. They haven't done it. We have seen people at least not going ape anymore over buying puts on the VIX. That continues to be one of the best signals. But what I look at, and why I suspect that we've got maybe 3,000 written in the cards, is just how amazingly overboard everybody went for, what are you going to call it, from about Tuesday to Friday, Friday and maybe even Monday, Friday-ish. Let's zoom in on this so you can see. This is the put-call ratio for the VIX and the regular equities. The equities did see a little bit of a trend in put buying, but nothing like that 4-day, what is that, 24th, 27th, 28th, 29th. And you all know how I hate being short into fund buying. Back in a minute.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we're back. Let's do a little history, and then we'll move on and talk a little bit more, and I'll get back on my soapbox.
Then it's all just a little bit of history repeating.
On this day in 1961, from Cape Canaveral, Florida, Navy Commander Alan Bartlett Shepard Jr. is launched into space aboard the Freedom 7 space capsule, becoming the first American astronaut to travel into space. The suborbital flight, which lasted 15 minutes and reached a height of 116 miles into the atmosphere, was a major triumph for the National Aeronautics and Space Administration. Of course, last Friday, the NASA doled out about $850 million for a prototype of the next moon lander. I think 3 different types, actually, fairly interestingly enough. And that's about half the money that they actually spent on the first one. So not that much money yet. I guess this is all to get a prototype, and then they'll build a one. But Musk has one, and I can best describe it as a high-rise in Manhattan. You got to take literally, they got an elevator that pops out of the side of this thing and goes down the side of it. I'm not a big fan of going to the moon and having my rocket fall over. These things are all return to orbit vehicles too, by the way. That means that we'll just be sending up fuel for these things, and they'll go back and forth from the moon to the ISS or some other higher orbit. But interesting. Anyway, 3 different versions, one from that, one from Jeff Bezos, Citizen Kane Bezos, and, of course, Boeing and the rest of them, kind of a joint thing with the United Launch Alliance. And then one little outfit out in Arizona, which is kind of the one I like the best, because guess what? You only have to go down a few steps on a ladder on that one. The other 2, man, you're living in a condo on these things. It just makes me think like they would fall over, but they're all much, much larger. The small one I like is kind of like the VW Bug of the ones, but they've got, I think, a year to go out and build a prototype for a lunar lander, but it has to be reusable. The one in the small one I like has a bunch of fuel tanks, and I think you just plop the old fuel tanks off, put the new ones on in a spacewalk, and you're ready to go back. It looks like the one that would be cheapest. Maybe that's why I like it. The other ones look like I said, glass structures down on Central Park or something, just a little bit ostentatious. And of course, having to go down a 7-story elevator from Musk's version, I don't know if that makes sense at all. But they're all interesting versions, and they all passed muster for the first pass that they got enough money to go out and flesh these things out a bit. But hey, we're going back to the moon. And of course, all these things are going back to the North Pole of the moon, where the sun pretty much hits them all the time. The cheap one that I like also had solar cells that went straight up into the air above it. So once it lands, it pops those up and it catches them over the horizon of the moon to get power. I thought that was pretty smart, but it looks like the thing's got its hands up all the time. But they're just solar panels. But I do digress. I do like space. What else is... Oh, that was actually a question I was going to get to here. Had some fairly long questions in the last few days about building computers for trading, some other stuff, and why is AMD really crushing Intel at retail PCs, not those on the in the server market. And I thought I'd get to that today. AMD maybe 3, maybe 4 years ago, went to a thing called chiplets. And this is going to get a little in the weeds, but I think you're going to understand why AMD is doing so well in the retail market. If you look at anything that's being sold now that'll say something like a 2 cores or 1 core or 8 cores or 16 cores or 32 cores, which is what I think Steve bought. I bought a 12-core machine here recently. But AMD and Intel fundamentally build the chips differently. AMD makes each one of those cores separately and tests them. Intel tried to do all of them then together, and if they just don't pass muster, they just turned them off. You actually have those cores probably in your processor. If it's a 4-core and you bought it, there was probably making a 6 or an 8-core at the time, and it was one where 1 or 2 of the cores just didn't work out. They just go in there, cut a little line with an X-Acto knife, and you got the 4-core. And they stamp a new number on the top of it, and you're off to the races. So that's the way Intel was doing it. AMD has decided to make all the little cores by themselves, test them, and then put them together based on how well they perform at what frequency and temperature range they have. And in that way, they can make a 3700, a 3800 chip, a 3900 chip, 3950. I bought the 3900s. I think Steve bought the 3950. But, it depends on what you're doing. I don't do a lot of processing inter-day. I tend to be a big swing trader. I know Steve does a lot of stuff, has a lot of programs that he had written for him that run during the day. So I don't need near the real-time response that someone trading on, hourly charts would need. But it's everything I need. But again, the only difference between my processor and his was probably that a few of them, of the cores, didn't actually pass the temperature test that his did. But enough of them did. Anyway, they take these chiplets. And of course, on Intel, they just reduce them. At AMD, they kind of test them all, and the ones that are good at a certain speed, they all put in a bin. The ones that are at a little better speed, they put those in a bin. They put in the another ones in a bin. And the price on the very high end is not set by how many came out perfectly, but how many of these little chiplets they can put together. That has reduced the cost of their more expensive processors. Again, $3,950, $750. 3,900 from AMD is about $425, $450. So that probably, you could spend another 50% to get the equivalent in Intel right now. And of course, there's, with Intel, there's a little bit of what they call the silicon lottery, which is sometimes you get chips that are much better than others. And if you go to Dell, they actually go through all the chips that they get from Intel, and they sell some of them. The ones that perform the best, they mark them up and sell them. But we'll talk a little bit more about this. But Intel and AMD, kind of fundamental different way of making chips is the big difference. We'll be back in a minute.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Quick question comes in about is NVIDIA being heavily shorted? The answer is yes, 25% yesterday, pretty much the same before. Not huge short interest in the last number, but like I said, the last 4 or 5 days, it's been pretty brutal. Almost 30% last week on the 27th to 28th, and of course that was around 291. So if you're gonna think about people going and getting squeezed. You kind of want to look and see where NVDA, where they were really shorting the daylights out of it. And yes, we're up $7.50 on NVIDIA. This is where the shorts are going to start getting nervous tonight. And like I said, I suspect that we see 3,000 before this market tops out. Maybe we get volume coming back in, but I mean, we're within 1% of all-time highs on the NASDAQ. Not hard to believe that the S&P could get to 3,000. So, and again, I've been fairly bullish. I suspect if you want to be bearish, that maybe in the next couple of days, maybe we see some kind of push higher. Maybe all the volume falls out and you get that sell signal, but we have not had that yet. Other questions coming in. I will get that out to you for the next break. Who's that? Todd. I'll get that out to you in the next break. I got the other ones done, but you were the last one. What else? Oh, we were talking about AMD. Of course, AMD does compete with NVIDIA on video cards, but their NVIDIA cards are far inferior, mostly not just because of their video drivers, which are horrible compared to NVIDIA's, but mostly they kind of build what they need. And I don't know. It just seems to me like AMD is all about the processors, and the video cards is a nice secondary business where NVIDIA knows that their business is over if they don't build nice video cards. But I suspect that the core to NVIDIA is going to be, and in the future, that they own machine learning. And I don't think that changes. So AMD's future, they sell video cards, but they sell them at a discount. Kind of the same thing like, the processors used to be, well, if I can't afford the Intel version, I'll buy the AMD version for a cheaper one. I don't really need much. That's kind of the exact same thing. If you want, if you're playing big video games, you buy the NVIDIA. If you don't have the cash, you go buy the AMD. Kind of the AMC of cars at the moment. I don't think that there's a lot of people buying AMD video cards other than they're broke, or they don't have enough money, or they haven't checked out to find out that the drivers for those games aren't fairly good. And of course, with NVIDIA, you always have the possibility of running machine learning programs that you do not get when you buy an AMD video card. So that's kind of it. Radio question, NVIDIA. Could it get to its all? I think, you got plenty of shorts out there in NVIDIA. Yes, they could run the squeeze back up to the highs. Like I said, I'm not a big fan of pulling the trigger short. It wasn't last week, not today. And of course, in the next few days, we could go and get a big sales signal, but we do not have one yet. Another question out here, and that is Qualcomm, or not Qualcomm, Western Digital. Excuse me. Western Digital did gap down earnings, not all that exciting. This is one of those stocks that I believe is going to zero. The problem is that spinning hard drives have a physical limitation. They're going to be out there for storage, but more and more the cost of memory for low-speed data storage is starting to put a hit even on the 4 and 8 terabyte hard drives that Western Digital has. Especially if you're in data centers, the cost savings for buying a spinning drive compared to buying an SSD or one that's really just a bunch of memory is starting to be almost on a parity. And of course, for Western Digital, or for Amazon Web Services, Google Web Services, it's the cost of owning this thing over time. If you make 1/10 the heat with a SSD over a spinning hard drive, the cost of just cooling the thing over the time may far exceed any additional cost that buying an SSD is. It's also going to be about 10 times faster than a spinning SSD. And now there are things called MVNEs, and the version 4 of that has been available for maybe, let's call it about 6 months. I put in a new one. The MVNE drives are memory, but if you get the right motherboard, they're 10 times faster than the SSDs. So you've got a hierarchy where you've got a hard drive, spinning hard drive. The SSD is 10 times faster than that, and the MVNE is 10 times faster than that. So if you're serving a lot of stuff, you're actually doing a lot. You can do a lot more with an MVNE at a level where you're at the web services level, like Google, Microsoft, or Amazon, than you can. And I think we may be at the tipping point. I've been doing some research on it. I think we're close, but it's just the enormous heat that the motors put out for a spinning hard drive, and of course the time it takes for the heads of the read-write heads to move over those platters. It's still probably for a while going to be a long-term storage mechanism. But if you're in the server business, if you can buy a less expensive server by buying a little bit more expensive MVNE or SSD solution, then you might be able to save, spend 10 grand less on a server by spending 5 grand more on better memory and on storage solutions. So Western Digital did gap down with that news. There's one more gap below it. I think it could go to 35. How long it takes to get to zero? It's like saying, how long did Kmart take to go to zero? Or how long did Radio Shack take to go to zero? These things the spigot's not going to be turned off immediately, but this is going to be a hard business to beat. Now, Western Digital ended up getting a contract with Toshiba to have memory. But again, they don't own their own memory companies. Very tough business going forward for Western Digital. Seagate a little bit better in that they did buy their own memory company, so they can charter their future. We'll look at them when we come back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
I had a quick question of what I look at, and this is it. I'm moving the mouse over it, which is just the short percent out here. But I just collect the data, put it in a database, process it at night, put it into my models. So, you can look on the FINRA website, put it together. But as I said last week, I try to do everything, automate it, whether it's in the newsletter, I want to write macros to do whatever I do, just to give me that extra little oomph when I'm feeling tired to finish some things that sometimes you wouldn't get. It's all about getting to all the stuff you need to and taking the drudgery out of working every day in the market, because a lot of times as soon as you lose focus is when that big score comes down. Okay. Let's take a look here. Okay, got an email here. Okay. What else do we have? Oh, let's get back to it. So anyway, let's take a look at STX. If I can find where my mouse went. There it is, STX. Like I said, this one's a little bit better. They own their own memory company, so they do chart their own territory. But both of these companies have a mountain of knowledge in spinning hard drives. And, if you've got the downtown of Atlanta and you've got a 2-lane highway going into it, there's only going to be so many people going in and out. And the problem with spinning drives is it's just physically moving those read-write heads over a certain speed just ain't going to happen. And that's where memory is much better. You don't have to worry about it going from one part of the drive to the other, although there is a little latency in memory by row and column, but it's infinitesimal in comparison to what hard drives have. I'm going to say SSDs are probably 1,000 times faster in latency from moving from one part to the next. So in comparison, almost a nothing. Anyway, 3840 back on Seagate. So yes, Jim, do I see anything different? Seagate is the better horse in a bad neighborhood, and that's probably the best you can say about them at the moment. But yeah. I was telling somebody in the den out here, I've got the MVNE PCIe 4 version in my machine, and it's from the time the computer posts, which is that bing It tells you that it's ready to boot. To the time that you see the Windows login screen is 2 seconds. So pretty blazing fast. Like I said, it's 10 times faster than SSDs, and SSDs are absolutely fast. Okay, what else do we have? Okay. Got that. What else do we have? Let's go ahead and start looking at earnings, and then we'll get into and talk about earnings in the last segment after the bell tonight and in the morning. See if there was anything that really jumped out at me. Chegg, CHEGG. We've been talking about what's going on with people spending their money. Chegg is a direct-to-student learning platform that supports students on their journey from high school to college and their career path. And of course, if you're looking for a clear breakout with unambiguous volume, this is called jumping the creek, or jumping the creek's when you go up, and breaking ice is when you come back down. We needed to get through 48.22. You needed to get through there with, a couple million shares. You got 25. Now, here's one of the things that I'll bring up that I learned from Tim Ord, who we have on every other Thursday, and that is the three bears: Goldilocks, Goldie Fella, and the three bears. Goldilocks and the three bears. And that is that you can have too much volume. So you don't want to chase this right now. But when you have massive volume, you probably have a buying climax or an exhaustion gap higher. The good news is you want to set an alarm for $45. If this thing gets back to here with very light volume, this is a beautiful breakout. CHGG, put that one on your radar. Now, maybe this changes as things get better with the pandemic, and maybe that hurts this. But I think that's probably a while. If you're just looking at the charts, that's everything that you were looking for. And of course, there's always a bull market somewhere. Regeneron, of course, this has been in the news nonstop. Gap higher here today. You needed about 1 million shares. You got 1.1 already. So this one's probably going to get out here with 1.5 million, 2 million shares. Again, back to the Goldilocks, just about perfect, right? You don't want too much. You don't want too little. I'd like a little bit more, maybe too much, or 2 million. But generally, in a valid breakout, you want something like 100% more, maybe 200% more volume. So if you're 1 million shares a day, maybe you get 2, maybe you get 3 million shares. You get 5 million shares, and you got to watch it, because that generally is too hot. And like the wings of what's his doodle, you get too close to the sun. The wings, the wax melts, and you fall back into the sea. Who was that? I can't remember it right now. Other big movers out here were Shake Shack, and I wouldn't say such a huge mover, other than it did gap higher and has given it all back today. I always wondered about these things long term. Skyworks Solutions, a little gap up, and of course this is a proxy for how Apple and other cell phone people in the food chain to build Samsung, LG, Motorola, all the other smartphones out there. It's got to 108.53, couldn't hold a new high, but it's still got some decent gap in there, still got some play. Icarus, thank you. I forget about that. Icarus and his waxed wings. Don't be Icarus. That's my thought for the day.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And I had a quick question if I was going to go through the earnings after the bell tonight, and we are. And that is Disney, Beyond Meat, Virgin Galactic, Pinterest, Interphase, Activision Blizzard. That one kind of interests me. ATVI, video game company. Of course, they all tend to report at the same time. Today is Tuesday. Okay. Activision Blizzard's already doing a little prairie dogging, putting its little turtle head out there before the act. Also tonight, that should be interesting, Electronic Arts doing the exact same thing, pushing brand new highs. And of course, in every bear market, there are new winners, and certainly it's been video games since that. Another one that I thought would be very interesting after all the social distancing is whether Match.com has anything going. Don't know how everybody is getting it on with Grindr and all the other stuff that Match.com does. But, stock price says that they're not being very distant from each other, if you know what I mean. In South America, we have the PayPal and Yahoo with Mercado Libre. Since it's all South America. Kind of tells you something if this thing can get back up to this gap down back from the 5th of March. It's back up there, and we'll see what earnings do tonight. But again, technology seems to be fairly unfazed by the pandemic. Other notes of interest tonight is Mattel. Hard to see how that does well. Planet Fitness, Arista Networks. Tomorrow morning, Shopify, Wingstop, Waste Management, Wendy's, Papa John's. Sell when you can, not when you have to. We'll be back here tomorrow, same bat channel, same bat time.